Hello everyone, I'm Dr. Sati, welcoming you to the global online platform. So today we are continuing our target of 1000 MCQ series now we are taking today the 50 most expected MCQ series. Okay, so let's start without delay. And here we are every week we are launching a new batch every Monday. In the Monday, we're launching a new batch. So our new batch will be started from the 24th of June and 24th of June. Okay, so if you want to join our classes, so here you will get complete course of the commerce and management, and here you will get 20% discount on the fees. And for the if you register yourself for the paper 2, paper 1 is free of cost for you. So in this amount 8,000 rupees, if you register yourself for paper 2, so paper 1 is free of cost for you. Okay, so the WhatsApp contact number is given in your screen. If you have any difficulty, you can get in touch with this contact number. And along with that, in the app you will get daily live lectures. Okay, recorded lectures is also available. Complete syllabus notes is PDF format is available in the app, so you can do study anywhere anytime, and the full syllabus mock test is available. And more than 4000 MCQ series, you know that in our channel we are taking continuously, we are targeted 1000 MCQ series, and after the completion of that, again I'm going to be targeted 1000 MCQ series in the channel. But it also available other than the channel, in the app also, the MCQs more than 4000 MCQ series is available in the app, and with a detailed explanation. Okay, and the PYQs with a detailed explanation is available. Okay, so let's join. And how to download the global online platforms, here I will quickly tell you about this. So go to Google Play Store, yes, and search the global online, and after that you have to open it after the installation, and register with your number. Once you register, so they go to my course, and here you will get whatever the paper 2 course subject you have, and you have to select that course. Once you selected, selected and paid, after that you will get all the contents in a well systematic manner in the PDF format. Unit wise is given, so the unit wise material, unit wise video, recorded video lectures along with the live lectures is on the app. Okay, and yes, the paper 2 is also available in the paper 1 is also available. Okay, so get in touch with touch with us. This contact number is given in the screen. So let's start without delay. Okay, so let's move the first question, which is in your screen. Who is known for the concept of a bounded rationality? What bounded rationality in decision making? So the bounded rationality decision making, what is that? First of all, what is the bounded rationality? So the bounded rationality is which state that the individual who do not make perfectly rational decision. Okay, perfectly rational decision because of the two things. Okay, the one thing that is his cognitive limits, uh, cognitive cognitive limits, and just because of his social limit. Okay, just because of his social limit. So what is the cognitive limit? The cognitive limit is that where you have found the difficulty in obtaining and processing all the information is needed. Okay, and what is the social limit? Social limit, that means your personal, your social ties among the individual. So these are the two limits they have to be going to be bounded in a rational decision making process. So these things, the bounded rationality is given by whom? So the option is given in your screen, that is Herbert Simon, Peter Durkheim, Henry Fayol, and Alfred Chandler. Okay, so what is the right answer for this question? So this bounded rationality, again I'm saying the bounded rationality is related to the option number A, that is Herbert Simon. Okay, so this bounded rationality is given by the Haber-Simon, and you know that according to the decision making, the Peter Drucker they give the MBO, that is management by the objective. Okay, so the Peter Drucker they give the MBO, and you know that in the MBO there are the 5 steps is involved. Okay, I'm just giving along with the information also. So the MBO gave the 5 steps, that is a process. The MBU consists of the 5 steps. Set a company objective. First needs to set a company objective. Okay, the second thing, that is cascaded objective to the employee. Okay, mine monitor. Okay, evaluating performance, reward performance. So these are the steps which is involved in the MBO, and which is given by the Peter Drucker. Okay, so here is the answer is bounded rationality is related to your option number 1, that is Herbert Simon. The next question which is in your screen: which among the following was the first bank to open the branch on the foreign soil? So which one of the following bank, that is a state bank or the Bank of India, Bank of Punjab, Allahabad Bank? So who is the first bank who opened the branch, his branch in the foreign soil? So the right answer for this question, that is Bank of India. So Bank of India is started his first branch other than India, outside the India, that is in the London. And in the London in 1946, in 1946. Okay, and you know that there's a 1946 is just before the just before your independence year. Okay, and once after that after that the second branch is open in the Europe, at Paris. Okay, at Paris, and in 1974. Okay, in 1974. So the right answer for this question, that is the Bank of India. Clear? So the next question: which one of the following criteria is related to consumer seeing the brand association as a personality related to them, desirability and differentiability? Okay, so the right answer for this question, that is option number C, that is a desirability. Okay, so what is that? The question is is about this criteria is related to consumer seeing the brand, okay, associated as the personality related to them. So according the consumer is behave toward the brand according to their desirability. Okay, so here the right answer for this question, that is a desirability. Okay, so uh, the next question, and along with that there is what is a brand association attribute? So the brand association attribute, that is a slogan. Okay, the brand slogan is melt in your mouth, not in your hand. So that is a M and MU. So this kinds of brand slogan they have used. Okay, so the next question, which is, in case of amalgamation in the nature of merge, in case of amalgamation in the nature of merge, option number A, accounting is made by the pooling of the interest method account. The option number B, accounting is made by the purchase method. Option number C, accounting is made consider considering the same as a slum sale. And the D, it is considered as a hostile takeover. So what will be the right answer for this question? You know that in case of amalgamation in nature of a merge, so the amalgamation is given in the accounting standard 14. So the amalgamation is related to your nature of merge, nature of merger, and nature of purchase. Okay, nature of merge and the nature of purchase. So here, which type of amalgamation? So in these type of amalgamation, this like nature of merge and the nature of purchase. The question is talking about the nature of merge. So in the nature of merge, the company is not only interested in pooling the assets and the liability, but it also show the interest in the shareholders' interest. Okay, and the business of these company, and the other things that all the assets and the liability of the transferor company. Okay, transferor company become that of the transferee company. Okay, transferee company. So in that case, in the types of merge, they are interested in the pulling the assets and liability, but it also in types of nature of the merge, they also interested in time in merge, they are interested in pulling the interest. Okay, interest method, they pulling the interest of whom, the interest of the shareholder. Okay, what shareholder. Okay, so the option number A, they are not interested. The accounting is made by the purchase method. This is yes, this is made by the purchase method accounting. But the question is about the nature of merge. Okay, so nature of merge is also related to they want to they want to catch the interest of they want to pull the interest of the shareholder. Okay, next question for the insurance of ADR. For issuance of the ADR, the option number one, Indian company directly issue that same to the global investor. B, the Indian company issue its share to the reputed financial institution in the USA that act as a depository. Okay, B option, the C option, the Indian company directly issue the same to the UK investor, and the D option, that is an Indian company issue the share to the reputed financial institution in UK that act as a depository. Okay, so what is happening? What is ADR? American Depository Receipt. So you know that what is ADR for the American Depository Receipt. So what is happening over here? The option number B is right over here. The Indian company issue its share to the reputed financial institution USA. Okay, that act as a depository. So that is the ADR. Okay. So right answer will be option number B. Okay, and you know that the ADR is categorized in two parts. Okay, I'm just giving you a small information, that is a sponsored ADR, and another one that is a non-sponsored ADR. Okay, ADR. Now the next question, that is a deduction in respect of the loyalty income of the author under the section 80 QQB is restricted to. So here the what is the royalty amount is a deduction is available. How much the amount is deductible in case of 80 QQB? Okay, so the 80 QQB, the royalty income is deductible. So what is for the author? So this is the 80 QQB is for the author, and the how much amount they allow to be deducted. So yes, there is an option number one, A, 25,000 income from the royalty, 50,000 income from the royalty, C, 2 lakh, and the D, 3 lakh. So what will the right answer? Yes, 3 lakh. 3 lakh is the income from the royalty is deducted under section 80 QQB. Now the next trips comes into force. TRIPS comes into force. So what is the full form of the TRIPS? First of all, the TRIPS means trade related aspect of intellectual property right. Okay, intellectual property right. So the right answer, TRIPS is related to option number A, 1995, 1996, 97, 98. So what will be the right answer? 1995. Okay, 1995 is for the TRIPS. Okay. Now the next question which is in your screen, what is the minimum amount of the RTGST? Where it is in where I will there is an important things you have that I need to explain it. I will explain it, but the some questions are they are really factual, so do need too much of explanation. So I will going with uh, too fast, okay? And that kind of question. So what is the minimum amount of the RTGS transaction under the retail internet banking? So option number one, 5 lakh, 2 lakh, 10 lakh, 1 lakh. So what will be the right answer? So here is the right answer is 2 lakh. Okay. So now the what is the RTGS? RTGS is for the real time real time gross settlement. Okay, so real time gross settlement, this is a full form of RTGS, and RTGS is from the NEFT. Okay, you know that NEFT is a National Electronic Fund Transfer. Okay, so RTGST, NTFT, so these are the having the minimum limit of the 2 lakh rupees. Okay, and which is in 2021. Okay, so the minimum limit is 2 lakh rupees for RTGS transaction in the retail internet banking. Clear? Now the matching pair is given, that is uh, group behavior. Okay, then duopoly, then duopoly, oligopoly, and king demand curve. So you know there is an author is also given and the meaning is also given. So here is right, so what were the how do we match it? So here you know that the group so first the two things you can easily match, that is the duopoly means where the two duo means two, so here is a two sellers is available only. Okay, so B is directly matched. Where is it? If B is related to 1. So A is going to be cancelled and the C is going to be cancelled. So B1 is okay here. Okay. Now the oligopoly means you know that what is the oligopoly? Oligopoly, that means one buyer and one seller, only one buyer and the one seller. So where it is C is 2. Okay, so here is the option number B is right answer over here, and A having the group behavior is given by the Professor Chamberlain. Who's given that? Professor Chamberlain. You know that how do you remember this? In the chamber there is a group discussion, group behavior you can see. So the Chamberlain is related to a group behavior. Okay, now the king demand curve is you know that is it is as simple as the king demand curve is given by this Swiss Z. Okay, so the option number B is right over here. The next question, that is monopolistic advantage theory of the foreign investment was propounded by. Who propounded this? This is propounded by option number one, Stephen. Option number B, that is Kindleberger. Okay, and the Hammer and the John Dungling. Okay, so who is giving this theory? So yes, this is theory is given by the Stephen. Okay, so what was which theory? Monopolistic advantage theory of foreign investment. Okay, foreign investment is given by the Stephen. So what is it? The Stephens say, Stephens, clear? Now the next question, just give me, I have give you the small information. That is Hamburg, the Heimer. Okay, so Heimer saw the role of the firm specific advantage as a way of marrying the study of the direct foreign investment with their class model. Okay, if you seen the class model, this word, so you can you just I'm not telling you the whole sentence, because you will get it is difficult to remember all the sentence. So you can the hammer you can remember this is a class model. Okay, of what of imperfect competition. Okay, imperfect competition in product market. In what? In product market. Okay, so it is given by the hammer. Okay. Now the next, under the GST, IGST is levied when? Okay, so the option number one, goods and services are supplied within the state. Goods and services are supplied within the state, between the state, and goods are supplied within the union UT, and the goods and services are supplied within the union territory. Okay, so what will be the right answer? Yes, it is option number B, that is the goods and services, the IGST, integrated GST, is living between the state. Clear? The next question, the accounting standard 3 on the cash flow statement is respective to Indian Accounting Standard is 3 and it is titled as a cash flow statement. Indian Accounting Standard 7 and it's titled as a statement of cash flow. Accounting Standard in Accounting Standard 3 and titled as a statement of cash flow. Indian Accounting Standard 8 titled as a cash flow. So you know that accounting standard, okay, accounting standard cash flow statement, now it is given by the Indian Accounting IAS, Indian Accounting Standard by 7, and the title having the statement of the cash flow. Okay, statement of cash flow. Clear? Now the next question, the standard deduction in case of the family. Okay, assume the alternate tax regime under the section 115 BAC is not optioned. Okay, so in that case, what will be the standard deduction? The standard deduction having 13,000 for the family pension, 90,000 family pension, 60,000 family pension, or 15,000 or 33% of the family pension. So what will the right answer here? Yes, in case of family pension. Okay, so the option number D is right over here, that is a 15,000 or 33% of the family pension. Clear? Yes, and or you can say this is this is a 1/3 of, okay, 1/3. Okay, now the next question, who wrote the book I Am Okay, You Are Okay? I Am Okay, You Are Okay. So this book is wrote by whom? The option number A, Thomas Harris, Barry Wagner, or Luthans. So who gave this You Are Okay, You Are Okay, I Am Okay, You Are Okay? So it is given by option number A, Thomas Harris. Okay, Thomas Harris. Now the next question, with a reference to the foreign exchange market, the function for the providing information functions to providing the information to the market making bank, okay, about the pricing at which they are firm. Buyer and seller in pair of the currency is formed by option number 1, primary price marker, or secondary price maker, or the broker, or the price taker. So what will the right answer? So here is the right answer, option number C, that is that is the broker. With reference to the foreign exchange market, the function for providing the information to market making bank about the pricing at which they are the firm, a firm buyer and seller is a pairs of the currency is formed by the brokers. Okay, who do this? The brokers is do this. Okay, the forex broker and broker is a financial service company that provide a trade access to the platform from the buyers and the sellers for the foreign currency. Okay, and here the forex is a short form of the, you know that this is a foreign exchange. Clear? And you know that in the foreign exchange market, it is necessary to having to the global and 24-hour market. Yes, this is a 24-hour market. Now the next question, in your screen. When a firm look for a new user in a group that might use the product, but not the firm is using that strategy. So what will be the right answer? New market segmentation, market penetration, geographical expansion, and a development market. When a firm looking for new user in a group and might use a product, but do not okay, new user in a group and might use a product, okay, but do not the firm is using which strategy. In case of new user, there will be a, what will be the right answer? So here is a conflict because of this question, because because the things is not going to be explained very well, because this question is from the, I took this question from the previous year question paper. And why this? Because here is no proper explanation. What is talking about is talking about the what strategies, what is doing, okay. So the question is, again I'm reading, when a firm is looking for the new user in a group, okay, new user in a group that might use a product, but do not the firm is using which strategy. So which strategy? So you know that the geography, the market penetration is not possible, okay, because in the market penetration is not given about the specific what is the things that they needed, okay. The geographical expansion is doubtful, and the product development and the new market segmentation. So here is a conflict between these two options, because new user, there's a possibility of the new market and also the possibility of the product development, because here is a might use the product, they either use a product development. So here is a here is there is a possibility of new market segmentation and the product development, okay. So now the next question, under perfect competition, when the price line ar AR passes through the minimum point of average variable cost, okay. So in that case, what it will be? So it is called as minimum loss point, shutdown point, break even point, or the profit point. So what is it? So what is it? AR, you know that is AR is like this, and the, you know that average variable cost is like this. So through which this area, okay. So this area is what? So this area, the under a perfect competition, when the price, okay, you know that this is a AR. Just give me a second. In the perfect competition, it's talking about the perfect. So you know that AR is going like this, okay, AR, and um average variable cost is going like this, okay. So in that case, in the average revenue, so these area, if we cross this area, so this point is what is talking about. Then the perfect competition, when the price line passes through the minimum point of average variable cost, if this passes from this, okay, if this is passes from the minimum point, so what is happened? This point is called as a shutdown point, okay. Now the next question, that is in a structural diagram for that suggested the three state of an individual, three ego state of an individual. So here, so what will be the right answer? Here is right answer, that is Chris, Argis, Eric, Berne, Tom, Peter, Ernest, Dell. So what will be the right answer? It is given by the Eric Bendel. So what is in the structure diagram? In the structure, the who suggests three ego state? Ego state, okay. Three ego state is given by the Berne, okay, is given by the Berne. If you having the ego in your so you can burn from the inside. So you can learn like this. That is a Berne, okay, and which is given in 1950. Clear? The next question, which this is a trick, this is a small tricks how to learn, because so many authors give us so many things, so many persons suggested so many things. So how do we learn it? So this small tricks will help you to remember, or remember, okay. Which is the first mutual fund established in India? Option number A, SBI Mutual Fund, Kothari Pioneer, UTI, Aditya Birla, Sun Life MAC. So yes, it is the first mutual fund is by the UTI, okay, Unit Trust of India. And when it is the SBI, that is UTI is established in 1963, okay, in the 1963. And clear. The next question, question number in dash marketing, it's not question. In dash marketing, the firms operates it's a several market segmentation and design the different market for the each segmentation. So the option number one, individual. Option number B, indifferentiated, undifferentiated. C, differentiated, and niche. So question is marketing. The firm operated in the several market segmentation. Several market segmentation. Okay, and design different product, okay, several market, but they having the product of the different product, they are not having the same feature, they are design different product for each segmentation. For each segmentation, that is what they are doing, they are differentiating the market, okay, according to the different product, according to their different market area, okay. So that why differentiated in the differentiate market, the firm operates in the several marketing segment and design the different product for each segment, okay. Next question, the mean of the 10 number. Yes, the mean of the 10 number is 58, and if one of the number is 40, what will be the mean of the other 9? So what we do here, that total the mean is 58, okay. The mean of the 10 number, okay, 10 number having the 58 and total number of the 10, okay. So for the 10, the 58 is a mean. So we are doing the 58 multiplied by 10. So what is it? 580, okay. So this is a total 10 number amount, okay. And after that, what one of them is number 40, okay. From this number, one of them, this is a 40 number. So what we do, from the 180 we deduct the 40. So what we get, 480, okay. And this from 480, how many we have remained now, because we have we have just removed the one. So how many other 9, okay. So it's talking about the other 9. So what we do, from the 480 to 5 is 540, sorry, from the 540, we divide the 540 with 9, okay. So how much we get, the 60, okay. So the what will be the right answer, that is 60. Clear. The next question, the term exchange rate regime refers to, okay. So here the the exchange rate regime, okay. First one, mechanism for the determining the exchange rate at a point in the time B, and the procedures to determine the exchange rate at a point in the times, and the C. What is this is an B option, okay. There is a printing mistake, okay. There's a typing mistake, not printing, typing mistake. The first one, the first A option is mechanized for the determining the exchange rate at a point in the time. The B option, that is the procedure for determining the exchange rate at a point in the time. C option, the institutional framework for determining the exchange rate at a point of time. And the D option, the mechanism, procedures, and the institutional framework for the determining the exchange rate at a point in time and change in them over time, okay. So what is the exchange regime? Exchange regime is related to your mechanism, procedure, institutional framework. For what? To determine the exchange rate at a point in the time and exchange them over a time. Okay, so that is a exchange rate regime. Clear? Now, a residence non-corporate assessee can claim the deduction under section 35D for amortization of the primary expenses to extend of. So what will the right answer? Right answer is option number D, 5% of the cost of production. Clear? Next, when the SEBI was established, Security Exchange Board of India, when it was established, Security Exchange Board of India is established in 1992. Next question: if MR is less than 0, then the TR will be. So TR will be rising, highest, falling, or 0. So it is a falling. Okay. So you know that how it is, how we do. Here is an AR. Okay, and here is a MR. And what is about the TR? Okay, so TR is started from here. Okay, so it is a TR. When it is a MR is a 0. Okay, it is a MR is 0. So it is what happened. There is in this point, this is the highest, this is the highest point. Okay, this is the highest point. And so from this, there's going to be, I'm not draw it very well. Okay, sorry for this. I'm just going to remove it. Okay, so is TR is like this, and here is falling. So in that point, the what is happening, TR is going to be falling. So this is MR. Okay, this is MR, this is AR. Now the diamond model assume that Diamond model is assumed that option number A, multinational firm must develop the global strategy based only on the home and demand condition. Multinational firms must pay less attention to the global consumer than the domestic consumer. See, the national home base of the firm must be the biggest market for the multinational firm. And option number D, the national home base of the firm play a key role in the shaping that firm and competitive advantages in the global market. So that is a diamond. This is a diamond model. Is actually diamond model is related to national income based on the firms to play a key role in the shaping the firm and the competitive advantage. So this is an important, that is a competitive advantage in the global market. Clear? So the option number D is right over here. Now the next question. Yes, the risks of return. The risks of return from the investment can be measured through option number 1, variability, rate of the return from the average rate of return or a derive in the form of the standard deviation. B, variability for the rate of return for the average rate of return in the derive in the forms of median. C, the comparison for the return from the investment with the industrial return, and the D, that is comparison of the return from the investment with a competitive return. So what is it? So right answer for this question, that is it. The question is talking about the risks of return from investment can be measured through. How do we measure our risks of return on investment? Is depend on their variability of the rate of return from the average rate of return. It derive from the standard deviation. Okay, so right answer is option number A. Next, Section 31 is the Competition Act 2002, deals with the appearance of the before commission, inquiring with the combination of the combination and order for the commission or the certain combination, and the rectification of the order. So what will be the right answer? So option number, yes, section number 31 for the Competition Act is related to, 31 is related to the order of the commission on certain combination. Okay, so there is a certain combination order of commission. Yeah. Next question, that is 21, 29. Next question. Actually, which of the following is not included in the job design? Okay, not included in job design. Option number A, identifying. Job design is not included. Identifying what tasks needed to carried out. So it is included in job design. When and how tasks are to be carried, yes, it is included in the job design. Then the number of tasks to be carried out, yes, this is a number. How, identify what task, when and how, number of. But the next one, the payment rate for the task to be carried out. So the payment rate is not designed in the job design. Okay, so the option number D is right. Okay, which of the following government scheme is related to financial inclusion? PMJBY, Pradhan Mantri Jan Dhan Yojana, okay, Ujjwala Yojana, PMJD JBY and JDY, okay, and the PM Uday. So what will be the right answer? Yes, PM JDY, Pradhan Mantri Jan Dhan Yojana. This is a government scheme is related to the financial inclusion. Jan Dhan Yojana, okay, Jan Dhan Yojana. Jan and Dhan Yojana is related to your financial. Clear? The next question, that is a marketing typically focus on dash. Marketing typically focus on dash in choosing the point of party and point of difference that make up their brand positioning. Okay, so make up their brand position is related to brand equality, brand awareness, benefit, and brand architecture. So what is the market? So it is option number C, that is brand benefit. Brand benefit is choose the point of the party and point of the difference that make up their brand position. Okay, so brand benefit is related to your brand position. Okay. Now the next, that is the IMF was established in 2000, in which year? So yes, IMF International Monetary Fund was established in 1944, 1946, 1955, 1956. So 1944 is right answer. Now the next question, that is one of the crucial assumption of the Walter model of the dividend distribution of the firm value is the firm finance is all the investment through external debt, external liquidity, retain earning, and the external commercial borrowing. Okay, so the yes, the Walter model is related to your retain earning. They are giving more focus to the, this is on the retain earning. If you having the market your firm value is greater, so what we do here, you have to what you your retain earning, you have to retain your surplus. Okay, the next, that is the cost inflation and index for the financial year 2020-21 notified by the Ministry of the Finance is that is the cost index, the CII, okay, cost inflation index in 2021 notified by the Ministry of Finance. What is it? So 289, 301, or 317, or 280. So what will be the right answer? That is a 301. So I will quickly tell you about from the 2020, 1920, 2021, 2021 to 2022, 2022 to 2023. Okay, so how what is CII? So for 1920, that is 289, for 2021 301, for 21-22 317, okay, and 22-23, that is 331. Okay, now next question, that is in inflationary period, additional depreciation is required to be charged to cover the backlog of depreciation of the gross current replacement cost of the asset, and that increase every year when the accounts are prepared as per. So B, that is A, the cash system, B, current cost accounting method, current purchase power method, and the mercantile system. So what will the right answer here? So right answer is current cost accounting method. You know that in inflationary period, additional depreciation is required to be charged to cover the backlog of depreciation. Okay, backlog of depreciation. So if all the backlog of depreciation in the inflationary period, if they want to be recover it, okay, so what they do, they use the current cost accounting method. What current cost? What current cost, not purchase, current cost accounting method. Clear? And the gross current replacement cost of asset is increased every year. Yes, now the WTA successor to the World Trade Organization, GATT, ASSN, EU and UNCTAD. So what will be the right answer? Yes, GATT. Okay, so GATT is right answer for this question. So you can comment me in the comment box. You know the full form of the GAT. You have to comment in the comment box. The next question, under the Companies Act 2030, companies with how much net worth have to spend on the CSR? How much they have to spend for the CSR, corporate service social responsibility? For the corporate social responsibility, 100 crores, 200 crores, 400 crores, or the 500 crores. So you know that therefore in the Company Act, the CSR, corporate social responsibility, they have spent net worth of 500 crores. Okay. Next question, that is which of the following combination is incorrect? So what will be the right answer? What is incorrect? That is teller is related to your scientific management. Yes, ma'am. Then the Mayo is related to Hawthorne experiment. Yes, ma'am. And after that, Dorcas McGeorge is expected theory. No, the Dorcas McGeorge is related to your X and Y, or X and Y factors theory. Okay, it's not related to your expected theory. And the Frederick Herzberg is related to your motivation hygiene theory. Okay, so what will be the right answer? Option number C. Now the next question, that is which is the largest cooperative bank spread over many states in India? Swaraswati Cooperative Bank, Cosmos Cooperative Bank, SVC Cooperative Bank, or Bharat Cooperative Bank, Mumbai. So which one is spreaded? Who won? The option number A is right over here. That is Saraswati Cooperative Bank, and this cooperative bank is formed in 1918, and you know that it won the Best Technology Bank of the Year award in 2019. Okay. Yes. What is SVC Cooperative Bank? SVC Bank, that means Shamrao Vittal Cooperative. Clear? Next question, in the linear regression, y is equals to a plus bx. What is b indicate? So b is what? B is a slope, intercept, variable, correlation. So b is related to your slope. Okay. And a is related to your intercept. Okay. And you know that what is the variable? X and y. X and y is x and y are the variables. Yes, the next question, brand dash is added value and want to the product and the services. So what is it? Loyalty, equity, preference, or the identity. So brand is related to your equity in the added value embedded to the product and the services. So equity is the right answer over here. The next question, assuming a constant level of fixed asset, higher CAFA ratio indicate. Higher CAFA ratio is indicate aggressive current asset policy, moderate or the conservative current asset policy, or the average current policy. So you know that assuming the constant level of fixed asset. Okay, so when the higher is current asset and fixed asset ratio, so it indicates that there is an a conservative current asset policy. Yeah. Now the next one, that is a historical record where the fund came from and how these were utilized during the year is known as fund flow, cash budget, or the capital budget. So what will be the right answer? The historical record where the fund come from and how these were utilized. That means source of fund and the application of the fund. Okay, application also, where we these two terms we use in the cash flow statement. Clear? Then dash is refers to the determination of all the goods and services by the interaction of the force of the demand and supply without any external interference. So what is it? So without any interference, the product mechanism, price mechanism, cost mechanism, reverse revenue mechanism. So what will be dash refers to the determination of all goods and services by the interaction force of the demand and supply without any external reference. Okay, so the price mechanism. Option number B, price mechanism refers to the system where the force of the demand and supply determine the price of the commodity and change therein. And in this, it is the buyer and the seller who actually determine the price of the commodity. Okay. The next question, marketing and innovation are the two basic function of the business enterprises. Who is known this statement? So marketing and the innovation are the two basic function of the business enterprises. It's denoted by whom? Kotler, Santon, Philo, or Dunker. So who has said that marketing with innovation is driven by the Peter Drucker? Okay, who is given that? Peter Drucker. So how do we remember this? A drucker make a marketing with their innovation. Okay. So you can remember this in one more way, like no. Okay. Anyways, now the next one, that is the 46 IPP. B is a banking denoted, that is Indian Public Personal Banking, Indian Post Payment Banking Bank, or the Indian Post Public Bank, Indian Public Payment Bank. So what will be the right answer? Indian Post Payment Bank. Okay, the full form of IPPB, Indian Post Payment Bank. Clear? And you know that the Indian Post Payment Bank was established in 19th August, okay, in 2015. Okay. Now the next question, in the correlation coefficient is a positive value, then the slope of the regression line. Okay, if it is a positive line, so slope of the regression line will be must also be positive, can be either negative or positive, can be zero, can be uh, infinite. So in the positive value, it must also be positive. Okay, it must also be positive. The next question, that is next question, the dash, the technique used to stimulating the creativity, defining as a problem, and then consider the dimensions and the mediums and the powers of the source. Okay, the attribute listening, mind mapping, lateral thinking, and the morphological uh, analysis. Okay, so it is a morphological analysis. This is the technique is used for simulating the creativity, identify the problem, and consider the dimension, medium, and the power of the sources. Okay. And actually this actually what is it, this analysis talking about the process of examining the possible resolution to the unquantifiable or the complex problem involving many factors. Okay. Now, which of the following is not phase of the memorandum of association? Situation, capital, subscription, or the direction? So what will be the right answer? Option number, that is a direction, is not a director. Sorry, director. The clause of memorandum of association is related to your situation, is related to the capital, is related to the subscription, but is not related to your director, because the director clause is given in the AOA, that is Article of Association. It's not in the Memorandum of Association. To find the debt equity ratio, denominators are the numbers of the equity shareholder, paid up share capital, reserves, reserve and surplus, and the net worth. So what will be the right answer? The option number D, that is a net worth. That when we find the debt equity ratio, what is in denominator? So in the denominator, there it is, and what is the debt equity ratio? The is total debt divided by no, either you will write a net worth, or instead of net worth you can write a total shareholder equity. Okay. Now, who is known for the pointing out the relationship between the strategy and the structure? So strategy and the structure, who find out the relationship between the strategy and structure. The strategy and structure is given by the Alfred Chandler. Okay. Then yes, here we are completed. Thank you so much. Here we are completed our 50 questions. I think more than 50 questions. So thank you so much. See you soon.